Today, we are going to be talking about Google. We will look at what analysts are expecting from their upcoming earnings on January 30th, recent news around tech layoffs that will have an effect on Google, and we'll leave off by taking a look at net income as well as shares outstanding and how those could affect the stock price over the next 3 years. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Let's start off by taking a look at Google's stock price. Over the last 6 months, this stock is up over 18%, and if we look at the last year, it's up over 52%, and it is now broken through its all-time highs that were achieved back in 2021. And these results were achieved after the stock fell over 40% in 2022, down to a price under $90. However, from there, the stock rebounded very nicely in 2023, up over 50% in a single year. And these strong stock returns come on the back of high single-digit EPS beats for each of the 3 quarters that have been reported so far. And expectations are high for the fourth quarter as well. We can see that they are going to report their earnings on January 30th, and analysts are currently projecting EPS to come in at $1.60 and revenue to come in at $85.23 billion. Along with those 2 important metrics, net income is expected to be reported at $20.28 billion for the quarter. And all of these numbers represent strong growth year over year, with revenue growing around 12% year over year, net income growing just under 50% year over year, and EPS growth sitting just over 50% year over year. One metric that investors pay a lot of attention to is cloud growth. And right now, analysts are projecting that fourth quarter of 2023 revenue for cloud will come in just under $9 billion, which would be about 22% growth year over year. And this would represent some slowing growth as Google grew their cloud business by 28% in the second quarter of 2023. And in my opinion, if Google comes in and beats these expectations with cloud revenue growth sitting anywhere between 25 to 30%, I think that could cause the stock to pop up after earnings. I think a lot of EPS and revenue expectations are already built into Google's stock price. However, if they come out with strong cloud numbers as well as a plan to monetize AI growth over 2024, those would be huge for investors and could send the stock soaring even more. And any strong cloud growth that can help Google make up some ground on Amazon and Microsoft will be seen as a positive, because currently Google is sitting as the number 3 player in the industry. However, they have a large lead on number 4 and number 5. It's really a battle between Amazon, Microsoft, and Google right now to see who wins on cloud. And over the course of the last year or so, we've seen a lot of these large tech companies focusing on increasing the efficiency of their workforce. And sadly, in many cases, this means layoffs. And in January, we have seen over 23,000 workers laid off. This is the largest number that we have seen since March of last year. And in March of last year, that number hit 38,000 layoffs. So it is showing that the industry is recovering from their overhiring that occurred in 2021 and 2020. However, there still might be a little bit of pain over the course of the next year. And some of the largest layoffs this year are coming from companies like SAP, who announced that 8,000 of their employees would be forced to either change jobs or get laid off, as well as Microsoft cutting 1,900 positions in their gaming division. And I'm not too surprised by Microsoft's decision to cut some gaming positions. I think that overall this makes sense when you think about what has occurred over the last 4 years. We think about the pandemic forcing a lot of people inside and playing video games, and now with things being reopened up, a lot of people are going back out. Also, Microsoft acquired Activision Blizzard, and likely they cut some of those jobs to really bring in only the best talent and restructure that organization to match what Microsoft is looking to do with the business. You also have to remember that Activision Blizzard isn't known for having the best workplace environment, and I'm sure Microsoft is coming in and they are going to look to fix a lot of those issues. And so far this year, Google has only confirmed a few hundred job cuts at the company, and this is far less than what we have seen at a lot of these other tech companies. And if Google really wanted to, they could go through with further job cuts. Over the last 5 years, we have seen them grow their employee count all the way from under 100,000 employees up to around 200,000 employees. However, their company culture tends to shy away from laying off employees. However, even with that, they have reduced their headcount slightly over the course of the last year, currently sitting at around 182,000 employees. Let's go ahead and take a look at some of the metrics behind the business. Here we can see their revenue over the last 5 years, and they have grown substantially. At the end of 2018, they were bringing in around $136 billion. That number has grown all the way up to $289 billion in 2023. And if they report a fourth quarter of around $85 billion, this will by far be their best quarter in the company's history. We can see that in 2022, in the fourth quarter, they they reported $76 billion, and in 2021, they reported around $75 billion for a single quarter. They will have beat both of these numbers by almost $10 billion. However, rising expenses have affected their net income numbers. We could see that in 2021, they hit an all-time high trailing 12-month net income of around $76 billion. However, since then, that number has fallen down to around $61 billion. However, if we see Google meet analyst expectations of $20.28 billion of net income in the fourth quarter, that would bring their total for the year to around $73.38 billion. And this would bring them back in line with the numbers that we saw at the end of 2021. And Google has also done a very good job of decreasing their shares outstanding over the last 5 years. We could see that in 2018, they were sitting around 15 billion shares outstanding. That number has decreased all the way down to around 13.57 billion shares outstanding in 2023. We can use these net income numbers as well as shares outstanding to come up with some price targets for the next couple of years. However, before we do that, we need to state our key assumptions. The first is around net income growth. We can see that over the last 5 years, net income has grown by around 19% year over year. We are going to project on the conservative side and say that net income in 2024 will grow by around 10%, in 2025 around 15%, and then in 2026 around 20%. And the reason I have Google growing faster in the future has to do with interest rates. The Fed is currently projecting that interest rates will hit 2.5% by the end of 2026. And what I would anticipate is as money gets cheaper, Google will have more opportunities to invest back into their business. But again, remember, all of these estimates are conservative compared to what we have seen over the last 5 years of 19% growth year over year. If we look at shares outstanding, we could see that year over year, they've been decreasing their shares outstanding by around 2 to 3% over the last 2 years. However, keep in mind that the stock has been trading very low over that time period. I would think that Google over the next 2 to 3 years will get back to decreasing their shares outstanding by around 1 to 1.5%. So based off analyst expectations, we currently have a net income projected for 2023 of $73.38 billion. Shares outstanding of around 13.57. This brings our EPS to around $5.41. And compared to analyst expectations for 2023, this is a conservative estimate. We can see that they are currently projecting EPS for the year to come in at $5.74. In 2024, we have that net income number growing by 10% to $79.9 billion and shares outstanding decreasing by around 1.5% to 13.36 billion shares outstanding. This brings our EPS estimate to $5.98. And again, this is well below estimates for 2024 from analysts. They have an average EPS estimate of $6.64. In 2025, we have net income growing by 15% to $91.98 billion and shares outstanding decreasing by 1% to 13.2 billion shares outstanding. This brings our EPS estimate to just under $7, $6.95. And in 2026, we have net income increasing by 20% to $110 billion and shares outstanding decreasing by 1.5% to 13.0 billion shares outstanding. This brings our EPS estimate to $8.47. So we can use these EPS estimates as well as forward P ratios to come up with potential price targets. And right now, Google is trading at a forward P ratio around 23.09. However, a year ago, it was trading all the way down to a 16.61. That's when the stock was trading really close to that $90 mark. However, I think that Google long-term should trade anywhere from a 20 to 25 forward P ratio. That means right now, with the stock trading around $150, it's kind of trading a little bit on the higher end of its valuation. However, in 2024, we could still see it move up to around $173.78. And then in 2025, we could see the stock trade all the way up to $211.71. This would be a gain of around 13.21% in 2024, and then a compound annual growth rate of around 17.44% in 2025. One thing to keep in mind with Google is that they rely heavily on advertising dollars. And what that means is if we see any weakness in the economy over the next 2 to 3 years, that will have a big effect on Google's business and the stock could trade lower very, very quickly. However, the reverse is also true. If a lot of companies are doing well in the economy, they're spending more on advertising, then Alphabet will do very well. And in my opinion, over the next 3 to 5 years, I think the economy will continue to grow and businesses like Alphabet and Meta will have a lot of success. But keep in mind, do not buy a company just because they're random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all of that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day.